Are you thinking about refinancing your student loans? I know when I had debt, I was thinking about getting a lower interest rate in any means possible. But refinancing in 2021 may not be the right move for you. Stay tuned and watch this video so that I can share more tips and tricks about refinancing in 2021. Hello and welcome to my channel. My name is Dr. Brittany Helford, and on this channel we discuss all things personal finance to build more joy and more wealth in all of our lives. And I've shared with you in the past about my debt-free journey. If you haven't watched that video, then go watch that video first. Part of my debt-free journey was to refinance my student loans, and it really made a big difference. But if I were in a position where I had to pay off my student loans in 2021, I'm not exactly sure that I would refinance just yet. So let's talk about refinancing your student loans and what it might mean for you in 2021. Now, many people confuse consolidation of loans and refinancing of loans, but they are distinct. Now, when I was in medical school, I had probably more than 10 loans, and they all had different interest rates. Some were subsidized, unsubsidized, and when I graduated from medical school, I condensed all of those student loans into one. So that means one lender, one loan, one interest rate. Consolidation takes multiple loans into one so that it can make your life a little bit easier when you're having to pay back loans. Refinancing your student loans basically takes an old loan, it sells it to usually a bank, and you have a new loan with a new lender at a new interest rate. Thinking about refinancing, there must be a benefit, otherwise you wouldn't do it. So what are some of the benefits to refinancing your student loans? I know for me, I realized that most of my payments were going towards the interest, and that means I'm getting nowhere with paying off my student loan debt. It was important for me to get the interest rate down as low as possible, and that is why I made the decision to refinance my student loans. That is the number one benefit to refinancing your student loans, is you can have lower interest rates. This wasn't the case for me, but sometimes when you refinance your student loans, you can also have lower payment. That means that you have more money to go towards other things, like maybe you want to invest while you're paying off your loan, and you can decrease your payment amount in order to have more money for other things that are a priority for you. Another benefit is that you have the opportunity to choose your lender. When I graduated, those Sallie Mae loans went to Navient, and I had no choice in the matter. But when you refinance, you can pick and choose who you actually want to refinance with. Just as there are benefits, there are also cons for anything that we do. The number one drawback for me is that my payments increased. They almost doubled. I took what was in a federal student loan with a 10-year repayment plan, and I refinanced for a term of a 5-year fix. Because the amount of time basically half, that meant that my payments increased and almost doubled. Oftentimes when you refinance your loan, you may also have a higher monthly payment. And I would say that the biggest drawback of refinancing your student loans is that you don't have the protections of the federal government. Now, we have seen that in the case of the pandemic has caused so many changes to our income. Thankfully, the federal government has allowed borrowers who have federal loans through the CARES Act to not have payment nor interest accruing until September 30th of this year. Now, if you refinance your student loans, you still gonna be making those payments. At least that's the case for my husband. We've refinanced his student loans, and we still have to make payments, and we're still accruing interest during this time. Now, I'm sure if we got into a huge bind, that we could call them to see if there's anything that they could do to help us out. Also, you lose the benefit of an income-driven repayment plan. If you have a loss of employment and therefore you can't make your payments, they will allow you to have lower payments or to go into forbearance. None of those protections exist when you refinance your student loans. Similarly, there is no loan forgiveness. When you refinance with another bank, you have to pay back that loan. So you definitely want to make sure that you carefully consider these drawbacks before making the decision to refinance. Next, you want to think about Are you a good candidate? Each person has their own blend of finances that makes them a better or worse candidate for refinancing. And the first thing you want to consider is your credit score. If you have good credit, then hey, why not? Because that means that you're more likely to be approved and also to have lower interest rates, as well as potentially having a lower payment. If you do not have good credit right now, it would be prudent for you to work on increasing your credit score before pursuing refinancing your student loans so that you can get the best interest rate possible. Next, you want to think about your income. Do you have a steady, consistent income? Because again, if you have any changes in your income, that refinance company may not be as gracious as the federal government to make changes to your term agreements to allow you to have either lower interest rates or to have smaller payments. Next, you want to think about your income to debt ratio. If your income to debt ratio is less than 1, then you would like to consider increasing your income or reducing your debt before refinancing. Of course, the reason why you're refinancing is because you want to pay less money. And so you definitely want to take the largest amount to that refinance company so that you can benefit from the advantages of refinancing. However, if your income to debt ratio is less than 1, ideally it would be 1.25 or 1.5 before you consider refinancing, because the refinance company is going to take that income into account when it's considering you for approval. And you may actually need a co-signer. Basically, that just puts another person on your loan and makes them accountable for paying back that loan in the case that you were to default. It also includes their income in the refinancing, so that makes you a better candidate for refinancing. As I mentioned, you want to take the largest sum of money to the refinance company as possible. The reason why I say this is because, say for example that you have a small amount of loans, and after looking at your budget, determine that you can pay those loans back in 6 months. It may not be worth the hassle to get the paperwork, to have the inquiry on your credit and go to a refinance company, because the amount of money that you may save may be much smaller because the loan amount is smaller, or that you can pay that loan back more quickly than anticipated. So what do you think? Is refinancing actually going to work for you? Let me know in the comments below, and let me know what things you are considering more heavily and your reason for refinancing. And if you thought that this video had any value to you, then go ahead and share it with someone. We want to grow this community of financial literacy so that we can build wealth within our communities. I look forward to seeing you guys next week. Bye-bye.